Good afternoon and welcome to the Blue Line Metals Edge here for Wednesday, April 6th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. I want to give you guys some exciting news. We did launch a new website today. It's going to be a lot more interactive, a lot more tools. The research is going to be on there. We'll have the standard research, the premium research. We'll also have seasonal trends as well on there. You'll be able to get quotes, charts, things like that. There's the education side there. I think that's going to be very valuable for you guys. And then also the platform, you'll be able to access it directly from there. That's the platform that I do a lot of these videos on. In the education side, a lot of really good stuff out there. You'll be able to click on things like the advanced research, go to some of these courses, start looking at things like how to trade, options during economic events, like we have non-farm payroll and things like that, different strategies and different things that I tend to outline with you guys that you probably grab it, but you could grasp it a little bit more and then really take the reins and run with it. So digging into the markets here today, looking at a couple things that are going on. S&P 500 really breaking down. We're down about 50 points. We were down closer to 60 a little while back. We are coming into the Fed minutes. I believe that they'll be extremely hawkish. Remember, the Fed's got to get this right away. They have to raise rates super aggressive at this meeting, probably the next meeting. Then after that, they're probably going to go pause for a bit and hold off and see what happens. And that's where I think that the economy starts to spill over, slowing growth, uptick in unemployment, uptick in claims, things like that. You'll start to see everything slow down and the Fed will take a pause. That's where gold, silver, they really get that launching pad. U.S. equities continue to drift lower on it. So looking at the S&P 500, I outlined yesterday, if we broke below this previous low here, you're going to see that extension down. We'll probably run into about a 50% retracement between this low when it was the panic low and this high here. Remember, this was the bounce, the short covering bounce, and it's a bounce in a bear market right now. This was that peace talks, that final extension. Peace talks kind of falling apart here. Now the economic data is catching up to them. So expect U.S. equities go down. If you're short the S&P, we're probably going to get out of that. We'll probably scratch, maybe get up a couple bucks on it. We'll get out of there. Most of you guys have on also short NASDAQ, which that's breaking down harder. Remember, the NASDAQ hates rising interest rate environments. And also the Russell. That one, if you look at this daily chart, the high was back here. The high on the Russell was also the high on Bitcoin. It was November 8th. The Russell was 24.58, so it was way up here. You go to the NASDAQ, that high was November 22nd. That was the peak in growth. S&P and Dow both peaked right on that first and second day of the year, January 4th and January 5th. So I think the highs are behind us. I do not expect us to go up, make new highs by any means whatsoever. So looking at some of the metals markets here. Oh, one other thing you got to point out, treasuries. Look at how low this has gone. Those treasury yields at 30-year mortgage rate, north of 5% right now. You can bet that people that are buying houses are going to get sticker shock when they start to see what their monthly payments will be with those 30-year rates. And you'll see housing permits, housing starts, building permits, lumber, those will all start to come down. So this inflation, it's transitory. Before it was permanent when the Fed was talking. You're starting to see some other markets like crude oil sell off here today. You had inventory data come out. I'd expect some buying to come in this area on the crude oil market. So I don't think we're going to completely sell off going to the 80s or 90s. There's just too much geopolitical tension, too tight of inventories right now, and too much demand at the moment. Getting with your metals markets, the things you love. One thing I'm watching is silver here. Silver's been selling off. It's doing a good job in comparison to like something like platinum, which has really been taking it on the chin. Again, remember I did a video outlining yesterday when EV sales go up, platinum demand goes down. So 40% of platinum's demand goes into catalytic converters and things like that. They're expecting some kind of shift. I really think the government's behind it. They want to make it so they'll make these mandatories where vehicles need to go so far and you can only do it with electric. So they'll make it where 40, 50 miles per gallon is mandatory, and that's how we get that big shift going on. So looking at silver though, one thing I was watching is if you add the MACD, the moving average, that 50-day, it comes in right here. We're right where we're at. So we might get a bounce off of this. Something like where we come back up. I'm probably going to be taking the dough, $25.50 on one, $26 on the other one, if you do have that July contract. So remember to scale in, scale on in your positions. Try and put them on pairs if you got enough equity to do so. Gold, holding really steady here. I mean, this thing feels like it's going to make, and I don't like to use feelings on this. It feels like something is going to happen. Like we are going to either break out to the upside or we're going to have another capitulation point. I think the Fed, though, they only raise rates once hard, twice hard, and then after that, they probably won't have any more firepower in there. So another market here, platinum, another extension down, 950, bounced right off the screws on that one. Probably a lot of buying going on there. Crude oil futures coming down. That's at the 50-day moving average too. Looking at futures performance, you go month to date. VIX popping up. We're only a few days into this session, up 6%. Natural gas breaking out to the upside. Ethanol, lumber, those are your worst performers right now. Lumber, like I said, and a lot of these different commodities. That's why I think that we're signaling some lower highs and that inflation really is not. Now the inflation is transitory in certain areas. At least it's going to signal lower highs. It'll probably be around forever. The only thing we had come out was the crude oil inventories. We had Yellen speaking earlier, and in 11 minutes after this video, we're going to have those FOMC minutes. So we'll see if things capitulate there. But if you have any questions, again, give us a call. Check out our new website. Let us know if you what you like on there, what you don't like. If you want us to add some things, take away. I know I'd love to see maybe an expiration calendar on there or something on there. I think that would be beneficial to you guys. But give us a call, 312-858-7303. Remember, futures and options trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.